The overall rally in the big indexes lost a little bit of steam throughout the day, but I think it was mostly just this intense rotation, this shift among different parts of the market, which actually shows relief that maybe the trade war was priced in, or this stage of the escalation is easily absorbed right now for the markets, because what you saw was, obviously the bond market sending yields higher, a general lifting of risk appetites across the world started in Asia overnight. That helps the banks. Some of the big manufacturers also got to help. The Dow is the leading index. They've been the most depressed by the trade war talk. And then you had domestic stocks on the losing end, small caps. And of course, big cap tech once again ended up slipping, and it's in a way they were a defensive trade, and I think that's sort of losing just a little bit of that altitude. It's hard to say if this is an enduring shift or we're just seeing a little bit of a retracement of some of the stretched trades.
Really interesting move in some of those banks, Mike. I mean, totally. We talked about the increase in yields. That justifies a decent day for the banks, but significant bounce in a sector that's underperformed, and some individual names that have really underperformed.
What surprises me about this, Robert, is that it took a very clear, obvious breakout of yields across the entire curve to have these bank stocks that almost everybody liked coming into the year and almost everybody said were cheap. And we were trying to explain why they were underperforming. Yields seem to just have to get to that next level, and then automatically these bank stocks got repriced by 2% as a group. So again, hard to know if that's not just a reflex or if it's really the start of something bigger. Maybe the bond market will determine whether that's in fact the case or not.
Rebecca, what do you think about the sector performance today? Do you think it's sort of justified to see a bounce back in some of these sort of banks and other financials?
I do, and I would echo what Mike said on yields, but I'd also add on that we don't know how far yields can go up. Right now we're benefiting from this great fiscal stimulus boost that should lift growth, that should lift yields at the margin. But as we head into next year and that fiscal stimulus fades, the Fed continues to tighten. Will the long-term yields continue to rise further, or are they going to find themselves capped? So I think the upside for yields as we head into 2019 is probably more limited. So I think the jury's still out if this bank move has legs or not. And obviously, when we get to mid-October and we have earnings season, that'll tell us a lot more about how they're doing.
And Rebecca, some of the other names that have rallied, not just today, but yesterday as well, have been some of the large multinational industrials, names like Caterpillar, Boeing, 3M. How should we think about this? I mean, they've tended to, until this point, trade lower on trade headlines.
Yeah, it is interesting to me, and I guess there has to be a bit of this trade war priced in, which has helped have this bit of a relief rally this week. We only have a 10% tariff instead of a 25% tariff, although we know we're not out of the woods by a long shot. We don't know if we're going to have the meeting at the end of the month between the U.S. and Chinese. Right now, it looks like we still have a step up in the tariffs at the beginning of next year. So I don't know if this is a relief rally, again, that has legs or not. I fear that going into the midterms, the trade war is something that might be politically beneficial for the administration, and so the rhetoric may stay. I don't know if we're going to get a resolution that quick.